Morning, market chameleons. Thanks for joining us for another episode of the pre-market show. How are you doing, Dima?
Good morning, Will. How are you?
Awesome. Before we get started, why don't we go right to the disclaimer? What do you think?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for. They're there to help answer your questions, provide you with guidance. There's the disclaimer. And
Excellent.
With that, let's get started.
Yeah.
Let me share real quick my screen. Actually, today I'm going to go quick. Let's just take a look really quickly what's going on in the pre-market hours. I also wanted to take a look to see if we could detect some rotation, sector rotation in the market, because to me, it looks like there's an obvious rotation going on. It's kind of persistent with a lot of volume in it. So let's take a look at that. Take a look at earnings and answer any questions going along the way. I also wanted to take a look maybe in, I'm going to try to go a little bit quicker so we can take a look at some trade ideas on the trade card. So here's the pre-market. This is the pre-market report, stocks that are actively trading in the pre-market hours. We've got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to first filter out stocks that are higher market cap stocks. Let's take a look what's going on there. So these are stocks with market cap $20 billion or higher. So here we go. I see 73 on the percentage gainers list, 14 made the decliners list. So from market breadth, looks like it favors more of the towards the bullish side. We see LI there, and I think that's in that auto manufacturer that's been on that list, making it already a bunch of times as auto manufacturers. And this is what relatively new IPO, Will?
Yeah.
In ADR here. So we see closed at 43.64, up 14.5% yesterday, up 11.7% in the pre-market hours, trading 48.73. That would be a 52-week high if it opens here. Pre-market hours, pre-market VWAP 47.40. So we're above there. Over dollar, trading 3.4 million shares in a pre-market. Couple other ones, I see Tesla making it. So Tesla's right here. I think that's a new 52-week high for up 4.9%. DLTR, that's I think Dollar Tree that reported earnings up 7.6%. I think we talked about that yesterday as well. Another interesting one, GE. That's really creeping up there. We discussed that, like, really big trade on that 10 strike when the stock was around $7.50 about a month, and since then it's just steadily been creeping up. Broke through that 10 strike, now trading $10.49. Really big concentration of open interest on the 10 strike in the January expiration. So we still got some time to go for those options to expire, and I think then after that there's some big concentration of open interest on the 12 strike. But that's been coming back, which has been really, did real awful in the last couple of years. If there are no questions in the pre-market, I wanted to take a look. Let's just see what's going on.
Someone had a question, actually, and it's another one of these electric vehicle manufacturers.
Okay.
It actually has been around for a long time, since the last administration. It's called the symbol is SPI.
Okay. What's the question?
Oh, well, it moved in the big market. It's up 47% in the pre-market. He was asking about it. But it's interesting just to look at this stock and, talking about the industry and how it's.
So this one is in the solar industry. That's what I have it as.
But it produces actually electric shuttle buses as well. That was
okay.
the recent news. It has it up.
Solutions for business, resident, government, utility. Let me just read about it really quickly. So engaging.
But it's interesting to see during the last administration when solar was something that was.
So this one, yeah, like look at that 52-week range. As low as 55 cents, high as $46.67. Yesterday it was up 12%. Trading $15.67 in the pre-market hours. That's up 46%. So it does look like, yeah, there's some news on there. I see some headline news. So what it's making, like the components for electric vehicles. Is that what it's doing?
Yeah, that's what it looks like.
All right. Well, I'll show you one of the in the sector rotation. There is one ETF that we've mentioned already a couple weeks ago that's in that solar space. Actually, I created a watch list, shared that solar watch list. So I'll take a look at that as well, the TAN. So if you're going to play it, right, and you don't know which stock to go, here's that solar ETF. So these are, it's an ETF that's comprised of companies in the solar energy space. And we've seen this one where it's been going up with high volume, holding on to those gains, kind of consolidating, then going even higher. So today we see if it opens here as in pre-market 82.5, that'll be a new 52-week high. You know, I've been watching that. We mentioned that, like, that there's definitely a rotation in there, and energy overall has been seeing lots of money flowing in here. Like, I'll just show you really quickly in the ETF space. So this is yesterday. Let's take a look at yesterday's performance. I'm going to filter out all the leveraged ETFs. So these are all non-leveraged ETFs. And if you see here, and I've been watching this day after day after day, and you just see top of the list, energy, you know, energy, you know, very persistent, going up. And it seems like now as it's going up, it's getting less heavy, right? Less and less resistance as it's pushing its way through. Solar's making it. Alternative energy makes this list. So what we're seeing now is technology. Let me show you here. This will be a better view. I'm going to take a look. So here's a snapshot of the S&P 500 and the sector ETF. So this is broken down each sector in the S&P 500. So here's the energy XLE. You know, this was very weak. You see on the 1 year. Look at the 3 month, right? 3 month, 2 week yesterday. This is compared to the overall market. It's starting to outperform, you know, and actually going up faster, right?
And it seems counterintuitive that the energy is moving at the same time as the solars, but I guess that's more of that the whole economy is going to start improving play.
Right. So right now, whatever the market is seeing, right, because the market's made up of lots of diverse, dispersed information that people are seeing and putting it, whatever the market's seeing, they're looking at it as that they can't, because the markets move right before earnings, before things happen.
Yeah.
They're seeing that the economies are going to start opening up. Maybe, you know, maybe they're seeing maybe less tariffs, you know, overall will create more trade around the world. But whatever you're seeing energy really starting to come back and strong. It's not like a 1 day pop on news. It's actually coming back like with conviction. So we see here energy coming back. There's another industrials, right? And financials actually are starting to as well. So take a look here. Look at technology. You know, what the things that we've been used to, like Apple and Microsoft, and look at that, how it's underperforming. Even as the market's going up, right? They're just starting to underperform, just kind of sitting there. Healthcare, look, starting to underperform. So you're seeing money coming out of, there's money flowing into the market because we're going up, right? But you see a deliberate rotation out of healthcare, technology, into energy, into financials, industrials coming back. Let me take a look here. Maybe a little bit consumer staples. This is staying. This is okay, but definitely out of healthcare, out of technology, utilities are starting to weaken, into energy, into financials, and let me see, and into industrials. All right, and that's been kind of persistent.
You know, they've talked about this rotation into value for a long time, and people have actually shut down their value funds because it hasn't happened in 10 years. So we'll see if this continues.
Yeah, and these are like real, to me as I'm watching, looking at the volumes, looking at the, these are not easy to push. These aren't just like a news story with some, bunch of retail investors. It takes a lot of money to push the way these are moving, technology, and it takes a lot of money, so the markets are seeing something. They're signaling something that we're going to have a rotation just in the economy. We'll see something different going forward. At least that's what it's signaling right now. Let's move on to earnings. Unless you have questions, we'll move on to earnings really quickly. Then I'm going to go take a look at some option trade ideas. So let's see earnings. So these are earnings. We're going to take a look at what's coming up in the next 2 weeks. I'm going to filter out by stocks that trade on average 5,000 option contracts per day or more. So here's a list. This one, top of the list, JWN. Let me just open that up really quickly and make sure that's the Nordstrom. So Nordstrom, that's expected to report today after market close. The straddle's implied move of 11.8% in either direction, according to yesterday's closing prices. That compares to 4-quarter actual average move of 7.2% in absolute terms, and a 12-quarter average move of 8.2%. So we see right now the straddle's implied move, that's 4.6% above the 4-quarter actual average and 3.6% above the 12-quarter historical average. High move on that in the last 12 quarters, 15.9%. GPS also expected today after the market close. Straddle is implying a move of 8.7% in either direction. That compares to a 4-quarter average move of 2.7% and a 12-quarter average move of 6.7%. So we're 6% above the 4-quarter average, 2% above the 12-quarter average. The high move in the last 12 quarters in GPS, 16.2%. AEO, let me take a look what this stock is. American Eagle Outfitters. So that's expected today after the market close. Straddle went out 10.6%, implied move 10.6%, compares to a 4-quarter average move of 7.7% and a 12-quarter average move of 5.5%. So 2.9% above the 4-quarter average, 5.1% above the 12-quarter average. High move on that is 14.7% in the last 12 quarters. Dell, that's also today after the market close. Expected move is 8.8% based on the option straddle. That compares to a 4-quarter average move 6.9% and a 12-quarter average move of 6.6%. So we're 1.9% above the 4-quarter average, 2.3% above that 12-quarter average. High move in the last 12 quarters in Dell, 10.3%. Let's do one more. HPQ, also today, expected to report today after the market close. Straddle's implying a move of 5.7%. That compares to a 6.4% 4-quarter average move and a 5.7% 12-quarter average move. A high move in the last 12 quarters in HPQ, 17.3%. So we're a little bit below that 4-quarter average, in line with that 12-quarter average. So that's HPQ. We have two more. Let's just do these last two. ADSK, also today after the market close, expecting to report implied move according to the straddles 5.8% in either direction compared to a 4-quarter average move of 3.5% and a 12-quarter average move of 7.3%. High move on that in the last 12 quarters, 15.9%. VMW is expecting to report today after the market close. Straddles implied move of 5.5% compares to a 4-quarter average move of 6.3% and a 12-quarter average move of 5.7%. High move on that, 11.1% in the last 12 quarters. So we're a little bit below on that, a little bit below the 4-quarter average and the 12-quarter average move. Well, do you have any questions? If not, I'll move on.
Well, someone was asking about Nordstrom earnings, if there are any, looking at the trade ideas, if there's anything in Nordstrom. That's JWN. Okay. He's a new user, so I wanted to give it a shout out. He was the one who had a question, Bryce.
Okay. All right, so JWN, here we go. That's expected to report today after market close. Let's just take a look at the history. So this here is what the straddle implied prior to earnings. That's what these bars are. So in the last 12 quarters here. So here it starts out at 0%. The bars tell you the percentage move up or down. The red bar, that's the actual move to the downside. Green bar is the actual move to the upside. So the one I'm hovering over here, on May 28th, after the market closed, Nordstrom reported earnings. The actual move was down 11%. The implied move was up or down 9.6%. So that move, 11%, exceeded the expected move. In other words, if you sold the straddle, you had to buy back higher. If you bought the straddle, it was worth more the next day. Here, that's on August 21st, after the market closed. Nordstrom reported earnings. It was up 15.9%. After reporting earnings, the straddle was implying a move of 12.8% in either direction. So in this situation, again, the stock blew through that straddle to the upsides. So let's take a look at the averages. Here in JWN, the options overestimated the move 42% of the time. Okay, so 42% of the time, the move was more muted. 58% of the time, it moved more than the expected. Okay, so moved more, even if it's by a little bit, like over here. All right, but on average, the average of the implied moves was 9.6% in either direction, compared to the actual moves of 8.2%. So still the implied moves, differential between the implied moves and the actual moves was about 1.4%. So when it was muted, you could see here very small moves, right? Over here, over here, over here. So sometimes the moves can be very small in this. Let's take a look at the implied volatility. I don't see any trades popping up right now, but this is what the implied volatility tended to do. We're looking at the 30-day constant maturity options that have expired 30 days out. On average, the implied volatility was down 27% day after earnings. So day before earnings, the average implied volatility was 59.3. Day after, the average implied volatility was 44.2. 5 days later, it looks like it continued a little bit lower, on average 42.3. So here I'm seeing right now we're way above the 83.5. Let me see. Yeah, so right now, yeah, this is the average 59.3. But you could see here from yesterday, we're on the higher range of these are the averages, high, low. Today didn't open up yet, so we don't know where it'll open up. But if it's close to here, you can see it's kind of been up, coming back in a little bit. But that's where we are now. Um, if you don't have any other questions, I'll just move on.
We had a question. This isn't about earnings. It's about we had a question about the ETFs.
Okay.
This is from Velociraptor, another newbie, new chameleon, was asking if he's looking at a particular ETF. I mean, you were looking at XLE, I guess,
Yeah.
or he's asking how can he dig down to see which stocks within that ETF
So
have been
let's
the
say
best performers.
So here's like XLE. You mentioned XLE,
Yeah.
the energy sector. So here's the XLE. If you go under here, because it's an ETF, you'll have this little thing, ETF info, on the left hand menu bar. And here you see holdings. You could click on the holdings. So you got a breakdown of, this is an XLE, 25 holdings. These are the symbols. This is the name of the company. This is the weighting, because most of these ETFs are market weighted. So this is the weighting of that stock inside the ETF. This is the market cap of the stock, dividend yield, current price, and here you have a breakdown of the holdings and the performance for different ranges. So today it didn't open yet, so we're all zero, but here last 2 weeks we could just kind of take a look. So this stock, FANG, APA, OXY, those were that best performance last 2 weeks. Do by there's 3 months, DVN, OKE, CXO. So this is the way to do it. You could also do it from the stock screener as well. Screen by holdings inside the ETF. But let me take a look. What was the other one? You said solar?
Well, we could look at solar, but they were, yeah.
Let me see if we don't have all the holdings in these. So these are so there must be a mix of foreign ones in here. So I don't have all of them right now in that one. But another way to do it, I think, is you could even do it from the stock screener. So a lot of our screeners, they'll have the major ETFs. So for example, if you want to just screen their NASDAQ, QQQ, NASDAQ 100, just select it in ETF like this. And then this will give you the holdings in the QQQ. And then you could screen, use the filters, or look at the, technicals, options, just do it by that. So
well, that gives you a lot more information if that's what you're trying to do.
So it gives you a lot more information to do it from a screener.
All right, great. Thanks for that. Hopefully that helps.
Any other questions?
Nope.
No. Let's take a look at, I'm going to go to the homepage real quick. So here are some of the most active stocks here. So we see Apple, Tesla, see what popped up in Tesla here. So these are ways to get, to get quickly trade ideas. And these are pre-filtered screens in our different strategies. So all these different strategies that you see under here, vertical spreads, long calls, long puts, butterflies, iron condors, what happen, we, as starting points, we set some preset filters. If those conditions hit in any of these stocks, then, those get filtered out. For here, of course, you could go use those screeners and use your own filters, but these would be starting points. So let's just take a look at the most active ones. Here's Tesla, yesterday, just showing you how this works. So it's defaulted by top 3 by edge. If you go over here, you could change whatever strategy you're looking for and just select it here. The default's top 3 by edge. So looked for, as of yesterday, filtered out this long call. Looks like the market's $21.70. We think theoretically it's worth $47.19 based on historical data, giving you 117% theoretical edge with a historical probability of success 37%, and that's buying the 580 call December 18th. Here's a bull. This is also a long call. It's this one here. It's a spread, so it's a little bit. I prefer myself. I prefer spreads over just straight long call or long put. So let's take a look at this. This is a bull put spread. It's looking at selling the 520 put December 18th, buying the 515 put in the same expiration December 18th. The credit for that is $2.40. So remember, credit is you're selling. So you want to sell above theoretical value. We think it's worth $1.73. So that's giving you a theoretical edge, 25.8%, with a historical probability of success, 65%. See GE, we just talked about GE. That's on the most active yesterday. So this is what it filtered out. Remember, these are top 3 by edge. You could always go and select the strategy. It's looking at the December 11th call. December 11th, sorry, expiration, the 10 strike call. It cost 43 cents. Remember that we didn't open yet. This yesterday's close. We think theoretically it's worth 55 cents, giving you a theoretical edge, 27.1%, with a historical probability of success, 31%. Let me do this. You could also, so these are the most active ones. You could also go for, let's take a look at seasonality bullish. So you could go across these tabs. Now these are looking for stocks that are in an uptrend and they're entering a seasonally strong calendar period. Okay, so for example here, SPY, it's looking at your starting point would have been yesterday, November 23rd to December 23rd, which is where this expiration is over here. And it's finding that between those calendar periods, in the last 12 years, sorry, right here, 12 years, 83% of the time SPY was higher for an average gain of 2.7%. So it's using those statistics to find what would benefit with edge, what strategy would benefit with edge based on those stats. So it's here, it is a bull put spread. It found selling the 361 put in December 23rd expiration, December 23rd, buying a 358 put in December 23rd expiration for a credit of $1.37. We think it's worth 89 cents. That's a 29.3% theoretical edge with a historical probability of success, 71%. Disney, next one. Let's take a look at that one. So we see here, this one's going from November 23rd, December 11th. In the last 12 years, Disney was up 83.3% of the time for an average gain of 2.9%. It's scanning, looking for the best opportunity using those stats. So here we go, seasonal bullish play. It found selling in December 11th, the 142 put, buying the 137 put for $1.24 credit. We think theoretically it's worth 85 cents, which gives you a theoretical edge of 10.5% with a historical probability of success, 78%. Let me go, because we're running out of time. I'm gonna go to my watch list route. Oops, sorry. Going back to trade ideas on the custom. So you could also screen by your watch list. So let me just take my watch list here. So I went to my watch list, and let me just go, here's alternative energy, just do it from my top. So the alternative energy, we're talking about things, money flowing into that. Solar, here's that TAN, the solar energy that we were talking about earlier. This one's also in that space. So I created an alternative energy ETF. So let's take a look at TAN. These are the top 3 by edge. Of course, if you drop this, you could select the strategy you want. It filtered out, buying in the December 18th expiration, buying the 85 call, $1.80. We think theoretically, based on historical data, it's worth 309. That's a 71.7% theoretical edge with a historical probability of success, 37%. Here's a bull call spread. So that's in December 11th expiration, buying the 78 strike call, then selling the 82 strike call, same expiration for $2.30. We think theoretically it's worth $2.61, giving you 13.3% theoretical edge with a historical probability of success 63%. Last one, bull put spread. This looking same expiration December 11th, selling the 82 put, buying the 77 put. Now we're selling, so we're looking for credit. We want to sell above the theoretical value. Selling it at $2.05. We think theoretically it's worth $1.66. That's giving you a theoretical edge of 13.2% with a historical probability of success 65%.
Nice job, Dima.
Thanks, Will. Hopefully that was helpful for everybody. Maybe we'll do some of these every day because I think a lot of people, don't notice these.
Yeah, no, it's great stuff. The chameleons are happy. Listen, everyone on the chat, we had a bunch of new people on today. I am pumping a link there right now to a Discord room set up by our man, the doctor. This is a great place for chameleons to go to chat about what's going on in the market, what they see. People are active on it right now. Everyone have a great day. Thanks so much, D.
Yep. Thanks, Will. Thanks, everybody. And hope to see you guys tomorrow, right?
Tomorrow. We're live tomorrow.
Yep.